China's rise as a global economic superpower has resulted in massive mergers and acquisitions globally. This was seen across Southeast Asia to Australia, the Americas, and Europe. One of the most important regions that China has invested over the years, however, was the European region. Indeed, this region has received billions of dollars directly from China, whether it be for a new facility or a company acquisition itself. Most people, however, don't really see this kind of story. We see stories about China's investments in Mexico, Africa, or even Australia, yet little is known about their European investments. Nevertheless, this is as crucial, if not more crucial, than many of their other investments. So, just how big is China's investments in Europe, and what are some of its largest investments done in the region? Well, let's first talk about the size and scale of all its investments before we talk about each of them. China's foreign direct investments, FDI, has changed over the years. It peaked back in 2016 at approximately 47 billion euros. It was a time when China was aggressively expanding through mergers and acquisitions. However, investment levels have since declined, reaching a decade low of around 7.9 billion euros in 2022. This represents an 83% drop from the 2016 peak. Despite this decrease, the size of individual investments and the strategic targeting of key sectors have kept China's economic footprint in Europe prominent. But overall, if we count all the investments every year, merger and acquisitions, it's a lot. Data from Statista shows that in 2023, the total FDI stock, which is the total value of foreign investments that have accumulated over time in 2023, is over $102 billion, and that is just into the European Union. Some data says that it might be over $350 billion. This is still quite small, but what makes this investment still interesting is that it is concentrated in countries that many don't invest in. Countries like Hungary. Further, mergers and acquisitions are also a major trend here. This is what we're going to first discuss, the acquisitions made. Many of you may not know that some major European brands are actually owned by Chinese corporations. One of the first investments we're going to discuss is Tencent's acquisition of Sumo Digital. This company is a British video game developer and was acquired by Tencent in 2022 for over 1.3 billion euros. Sumo Digital might not be a name many people know of. They have co-developed games like Hogwarts Legacy, which is one of the recent blockbuster games that got released, Call of Duty, Vanguard, a famous title in the video game arena, and Forza Horizon 5, which is another big title. But why talk about a video game creator? Well, the thing is, we are talking about Tencent. Tencent is, by and large, the face of China's overseas acquisition company. It has acquired some of the most well-known foreign brands over the years, and even was once a big shareholder of Tesla, the company of Elon Musk. Furthermore, this sector has limited regulatory constraints compared to critical technologies like telecommunications or semiconductors. This allows a Chinese company to expand their presence in Europe without worrying about politics. The second acquisition that is also of importance is Hill House Capital's takeover of Philips' home appliance business. In 2021, Hong Kong-based Hill House Capital, a private equity firm, completed a 3.7 billion euros acquisition of Philips' home appliance business. Yes, that is right. This acquisition has made many of everyone's Philips appliances to be owned by a Hong Kong company, or as many now see a Chinese investment. Thirdly, there's also the investment into the automotive sector. Geely, a prominent Chinese automotive company, acquired Volvo Cars from Ford in 2010 for 1.8 billion euros, a landmark acquisition that remains one of the most notable Chinese deals in Europe. Volvo is a name synonymous to European car brands like Volkswagen, Mercedes, and BMW. Yet not many know that it is also a Chinese-owned car company now. Volvo Cars, which shouldn't be confused with Volvo Group, has been recording profits for Geely. Currently, Geely owns about 78.8% of the company. Here's a table of Volvo Cars' income statements over the years. In almost every single quarter, Volvo Cars have been reporting profit after profit. On top of Volvo Cars, it is also worth noting that Geely owns a substantial stake in Volvo Group, which is a company that sells trucks, buses, construction materials, and so on. Geely owns about 6.7% of the company, making them the second largest shareholder. On top of this Geely-owned investment, it is also worth knowing that through Volvo, Geely has made big investments in Slovakia for an electric vehicle plant worth over 1.1 billion euros. Another significant acquisition was ChemChina's 7.1 billion euros purchase of Pirelli, the renowned Italian tyre manufacturer, in 2015. As one of the largest Chinese takeovers in Europe to date, this deal gave ChemChina a major stake in the European and global tyre markets. Pirelli's established brand and technology in high-performance tyres provided ChemChina with valuable expertise and market reach. Beyond company investments, there's also the investment in the energy infrastructure sector. China General Nuclear Power Corporation, CGN, invested 6 billion euros in the UK's Hinkley Point C nuclear power plant project in 2015. This investment, in collaboration with EDF, a French energy firm, marked China's entry into Europe's nuclear energy market. The project, however, has been fraught with controversy due to national security concerns surrounding Chinese involvement in critical energy infrastructure. Another major investment is CATL's Hungary megaproject. Contemporary Amperex Technology Company Limited, CATL, China's largest battery producer, announced a monumental investment to establish a 100 gigawatt-hour battery plant in Debrecen, Hungary. Once operational, this will be Europe's largest battery production facility, supplying major automotive manufacturers like BMW, Mercedes-Benz, and Stellantis. This factory alone is projected to meet a substantial portion of Europe's EV battery demand and supports Hungary's aspirations to become a European battery hub. How much was the investment? A massive 7.6 billion euros. CATL also has a major investment in Germany worth 1.69 billion euros, and so far they have received numerous praises for these investments. CATL, however, isn't also a name many of you know of. Yet look at its investments: 7.6 billion, 1.6 billion euros worth. CATL is a company worth over $151 billion, making it the 100th most valuable company globally. There's also Envision AESC's investment in France. It is valued at over 2 billion euros, which is a facility located in Douai. Envision also has a €450 million investment in the UK, which is geared towards supplying Nissan's EV models. As you can see, these investments aren't small, they're big. We haven't even talked about the small of millions of dollars, which, if we add collectively, would also amount to billions. For a quick overview of what these small investments look like, there are investments in REN, the National Energy Grid Company of Portugal, a company that the State Grid Corporation of China has invested in. There are also the investments made by Tencent and Alibaba in other tech companies like Ubisoft and Supercell. Supercell is a major Finnish company that was acquired at a value of 8.4 billion euros. Then, the controversial company known as Huawei, which has opened up several stores across the country and has invested in building 5G infrastructure and establishing research and development centres across Europe, notably in Germany, the UK, and France. Costco Shipping, a major shipping company in China, also acquired a majority stake in Piraeus Port in Greece, which has become one of the largest container ports in Europe due to Chinese investments, positioning Greece as a gateway for Chinese goods entering Europe. China Investment Corporation, the country's sovereign wealth fund, also invested in Heathrow Airport Holdings in the UK, among other airport infrastructure investments across Europe. Then there's also the very big investment of Syngenta by ChemChina. This deal, valued at around $43 billion, approximately 39 billion euros at the time, was not only the largest Chinese overseas acquisition, but also aimed to give China a foothold in the agricultural, biotechnology, and chemicals sector. Another one was Midea. In 2016, Midea acquired KUKA, a German robotics company, by launching an acquisition offer and completing it in January 2017. Midea spent nearly 30 billion yuan, 4.69 billion, to acquire a 94.55% stake in KUKA. H&A Group also acquired the Irish aircraft leasing company Avalon Holdings for about $2.5 billion. Now, let's talk about the challenges facing Chinese investments in Europe. There have been several issues lately. The European Union, which is the political and economic union of 27 countries, has heightened its investment screening protocols, particularly concerning sensitive technologies like semiconductors and telecommunications. Countries such as Germany, France, and the UK now have robust review processes to screen out investments perceived as national security risks. In 2022 alone, 16 Chinese investments were flagged for review, many related to critical infrastructure and tech sectors. On a country-to-country basis, there were also challenges. In a landmark decision in 2022, the UK ordered Chinese-owned Nexperia to divest its shares in Newport Wafer Fab, citing national security concerns over its semiconductor technology. Nexperia is a semiconductor manufacturing company located in the Netherlands, but it is a subsidiary of Wingtech Technology, a Shanghai-listed company. Just take a look at their published press release in 2022. They have raised concerns, significant concerns about these actions. They said that the government has chosen not to listen to them and instead taken this decision, which puts the livelihoods of them and their families, as well as more than £100 million of taxpayers' money, completely unnecessarily at risk. So, what does the future look like for Chinese investments? Well, most likely scrutiny. But anyway, do let us know what you think. Thanks for watching.